One. We are live. Hey, Mark, how is it going on this exciting Monday? It's the first Monday of March.
Yeah, you're right. It is. It is. So does that make it spring? I'm not
Well,
sure.
it depends what the groundhog, I didn't check what the groundhogs saw,
Oh, I think I heard it's going to be a couple more weeks. I think my daughter told
I'm sorry, guys. I think I ran over it a couple of weeks back.
me.
Oh, wait, you ran over the groundhog, you said, or?
I'm so sorry. It was either me or him.
Yeah.
That's
So
funny.
yeah, it's first week of March. And the market just keeps on moving. It continues its climb higher, which is nice. We've been talking about this a bunch, and I thought it could easily go into mid-March, before we really saw the recovery. And here we are finally getting a little bit of gain, not a whole lot. The market's been basically moving sideways since like the first week of February. We had the biggest drop in the market was February 6th, where it had dropped down to about 270 billion or somewhere around there, 279. Today it's back up to 479. So I mean, it's almost gone up 100% since that low of February 5th. I know Kevin was a big beneficiary of that. He was able to buy on that dip, right, Kevin?
Yes, and I'm still loving it. Like I said the other day when I went on a live on Facebook because I couldn't get on the Zoom. And since I've been, following you guys and doing my own research and and I started really paying attention to the charts. And I actually started using the charts like I do my atlas, planning my trips and my routes. And it's actually coinciding with each other. It's kind of crazy. So, yes, I'm really loving it. I'm really loving it.
Hey, Kevin, your video went out.
Yeah, I'm over here at the house, and
Okay.
I have that satellite internet. I'll turn it back on, but I might freeze.
Okay,
Yeah,
that's fine.
I think we'll just have him as a voice because of all that this morning.
That's fine. So Kevin was a big beneficiary of that. He's contrarian enough to go against the trend, right? And we talk about this all the time, how human nature keeps us from being successful. When it's at 800 billion, we all want to jump in and buy, but that's the top of the market. When it's at 279 billion, and the funny thing is when it's 800 billion, when Bitcoin's 20,000, everyone's buying and going, oh, if I could only have bought it at 7,000. But then when it does go to 7,000, nobody wants to buy. And so that's human nature working against us. Now, people that are more disciplined and kind of understand how things are going, people like Kevin, people like myself and Charles, we were buying in. And so from that dip on February 6th till today, we've doubled our money. It's been amazing. It's an amazing run. And, part of that just comes down to understanding fundamentally, these different projects and what we're getting in on. So we understand fundamentally that this technology is going to be probably the biggest shift that we've ever seen in the world. We understand that we're getting in early. We understand that these companies are really, really solid projects. And when we can buy them for cheap, I mean, heck, we're doing it. And so,
Now, I think one thing to note, even though you like to make it sound like we're these smart people, we're still pretty emotional. I've been having another 30 grand I'm trying to put in the market. And I've watched Bitcoin go from 8 to 10. I was hoping it would dip back down to 9 or 7 before getting in. And now Bitcoin's up to 11.5. So I'm like, oh my gosh, has the train left the station? And am I going to put the money in? Or at that point, once I put it in, it's going to drop back to 9 again. I'll be like, FOMO, or, everything on that front. So.
Yeah, I mean, the easiest way to just get over that, though, is having the right perspective. And so if you're a trader where you want to get in and get back out and you want to generate that cash for next Friday's bills or whatever, then you have to look at it that way. You have to. But when you look at it like I look at it, or probably I'm sure Kevin looks at it, where like, heck, I'm putting this money in. I don't need it. I'm going to let it ride for the next year. then whether I get in at 10, 10, 5, 11, it doesn't really matter to me. You know, that's probably the big difference, is having that long-term perspective. I believe it's going to hit 25,000 this year. So whether I get in at 10, 5 or 11, it doesn't really matter when it's at 25,000. I mean, not that much. Obviously we all want the best deal, but the problem is I've been in this space for over 2 years now, which doesn't sound very long, but in this space, it's a very long time. And, you know, I got people, I know a dozen people that are still waiting for it to hit 4,000, and it never did. So you keep waiting for that dip, and that dip never comes. And next thing you know, you never got back in the game at 4,000, and now it's 11,000. Now you're waiting for it to dip to 10, and next thing you know, it's going to be at 17. So, you know, for me personally, my portfolio, I never sold any of it. And so, you know, yeah, I watched it go from 18, 19,000 down to 7,000. I watched it. It was painful, but now it's coming back up. Because I recognize the huge opportunity. Is the first time in over a year and a half I've actually put new money into the market, and I bought on the dip as well. So anyway, just interesting. You know, we're still somewhat in that choppy kind of back and forth, up and down phase, but we're making slow progress. The one piece that I find super interesting, and I talk about all the time, is that when it comes to investing, well, really maybe most things in life, but when it comes to investing, we have like this average, like this median, this mean, and things tend to move within that range. And the further they get away from the range, the further they're going to snap back down below. And then they'll get smaller until it gets there, and then it starts doing that again. And so one thing that I watch is the Bitcoin dominance. And so you can go into coinmarketcap.com. At the very top, it shows the market cap valuation, and it shows the Bitcoin dominance. That's what percentage of the market that Bitcoin makes up. And Bitcoin in December had gone, it typically likes to be about 50%. That's where it likes to be. Now, in December had gotten up to 65% of the market, which is too high. And so when it's that high, we know that it has to come down. And it dropped all the way to 35%, or maybe just under that. And I was saying, hey, it's at 35%. I believe Bitcoin's going to try to get back up to 50%. And so anyway, I've been watching that number. We're at about 42% right now, or 41% right now. So we're watching that climb. I think, you know, as we've talked about before, you know, when the market drops, when the market valuation drops from 800 billion to 300, 200 billion, it's not that, you know, $400 billion vanished. Like people went and withdrew $400 billion. It's not a balance. It's not like your bank balance. It's a valuation. And so what that means is that's how much it's valued at. That's how much people are willing to pay for it. So imagine if I wanted to sell my house for, you know, $200,000, and, you know, nobody would pay $200,000. They would only pay $150,000 for my house. It's not like I lost $50,000. It's just the value was lower. And so the reason why that's important is that valuation is driven by sentiment. When people feel better about the real estate market, when jobs are higher, when income's higher, they want to pay more for a house. And likewise, it's the opposite. Well, this market's the same. And so when prices start going down, people start feeling negative about the market. Oh, it's going down. I'm only willing to pay less and less. And so it drives the price down. The reason why I bring that up is because I believe we're right at the point. I think if Bitcoin can close above 11.6 today or tomorrow, I think we're going to see a massive sentiment shift. And that means people will start feeling good about it again. And people will start thinking we're back into a bull market. And if people believe that we're in this bull market, then people are going to want to start paying more for it, and they can start buying it back up again.
Wow, yeah, that's amazing. And I guess it becomes a whole interesting economic argument in terms of how the system works, right? Because the reality is the alts are still all tied to Bitcoin. You know, Bitcoin is our reserve currency, right? So as Bitcoin goes up, the alts follow, and now the whole market rises. You know, and obviously there's a lot of interwoven, you know, steps that occur, right? Because Bitcoin will go up and then the alts will drop and then the money will shift from Bitcoin into the alts and all that sort of stuff. But it becomes, yeah, I mean, we could probably spend hours just going through, you know, the interrelationship, right? when Bitcoin goes up from $10,000 to $11,000, well, my whole altcoin it's not just Bitcoin goes up, but because my alts are tied to it, a lot of my alts kind of stick with it, and my whole portfolio increases 10% or whatever on that front.
Until Bitcoin really starts taking off, and then people want to dump their alts to move into Bitcoin. So like you said, there's a bunch of different movements within there. I believe, I've seen the market mature. And so we've started to see really just over the last 6 months where the alts and Bitcoin can start to move independently of each other. And now we're even starting to see altcoins move independently of each other. So we're getting there. The market's maturing, but we still got a ways to go.
Well, let's talk about, mature markets, new markets. And I think this is a good segue. There was some news this weekend. And let's talk about, this concept of consensus protocols and everything. So as people are aware, Bitcoin is built off a consensus protocol termed as proof of work. And, I'm going to butcher it, but high level, it boils down to if you have a lot of processing power, that's basically gives you your share or your stake in the consensus protocol because you become a miner and the miner mines the nodes, so forth, and so forth. Now, conceptually speaking, everyone liked proof of work, but now an entire body of alternate possibilities or alternate methods have come across because although proof of work, from my opinion, works democratically, because anyone can get in, all it is a function of processing power, there are a lot of what I would term off-chain advantages that one can use to take advantage of the system. And specifically, what I'm talking about is proof of work is literally boils down to a function of processing power, and processing power boils down to in terms of two sub-functions of manufacturing supply chain and also power and energy costs. So even though conceptually speaking, the Bitcoin network and also the Ethereum network in some cases was built off this democratic or decentralized concept, there are issues with the seemingly lack of decentralization. Specifically, I think, the Chinese who do all the manufacturing and have the cheapest power have a disproportionate share of hashing power and ultimately the possibility of, taking over both with either Bitcoin or Ethereum. Now, there's a whole nother argument of whether it's possible or not, and I'm not trying to get into that. But because, like in the case of Bitcoin, there are 4 organizations that own 51%, or Ethereum, where I think it's under 2, other consensus protocols have arisen, specifically around, modifications of proof of work and the concept of proof of stake, and then other things that have come across. So, I've been taking a close look at NEO, not because I believe that that's the best thing since sliced bread, but because being cognizant of some of the issues with Bitcoin and Ethereum, that NEO might be an option to look at from a platform. And NEO, I think, has created a little bit of controversy because I guess the difference, Bitcoin hypothetically is decentralized. NEO is saying there's nothing decentralized about us, but we recognize that decentralization really isn't decentralized. So what NEO has done is they've proposed a consensus protocol, which is essentially more of like an oligarchy. I guess the best example of NEO is like being an NFL owner, right? To be an NFL owner, you need to have a set stake, so much net worth so you can buy the NFL team. But just dollars alone doesn't get you into the NFL. You've got to have the other owners vote on you to accept you. And hypothetically, the other owners could vote to kick you out. So there's obviously more to it, but I just want to put this out. And the reason why I want to put this out was over the weekend, and Mark, maybe you want to talk about it. There was a little issue that occurred on the NEO side. And part of it is, these are all developing technologies, but let me hand it to you, Mark, and why don't we talk about the issue and maybe discuss it a little further?
Yeah, I mean, the one thing that I always try to bring back, bring the conversation back to is snap back to reality in a sense, which is we're so early in this. And so what I mean by that is that all this technology is just being figured out right now. It's not at a level for enterprise level, consumption or use. And so we have to keep that in mind. So, you're talking about different consensus algorithms, and consensus algorithms is the way that this decentralized works. So in layman terms, what that means is that, whether it's Bitcoin or NEO, what he's talking about, there's computers, for simple terms, spread all across the world maybe, and they all run the same copy of the code. And what happens is if I want to move money from here to here, all of them have to have consensus. They all have to agree that, yes, I have this, and yes, the transfer's been made. That's the consensus. They're all agreeing. And so the way that consensus, that agreement takes place, is being changed and reinvented all the time. So all these new blockchain companies are coming up with their own ways to do consensus. Now, partly, because this is so new, we don't really know which one's going to be the best. We don't know which one's going to survive. And because they're not really being used on a full-time basis, we're not really even seeing them being stress tested, right? Where they're really being used. But the one thing that I also want to say is that typically what we see is we'll always see something start out centrally controlled, and then eventually we'll move to decentralized. And what we've seen when we study history, different technology trends, is that that's typically the best way to do something, is to centrally start it and then let decentralization take over. So like an example would be Salesforce, which maybe some of you guys have heard. It's a software as a service, which means it's a web-based software. And it's used for businesses to keep track of their customers. It's a CRM, a customer relationship management software. And that was started by Salesforce, which was a centrally owned company. But what they did is they opened up the code to allow all these developers to come in and build applications on Salesforce. And because they opened the code and somewhat decentralized it, it allowed it to scale super fast, way faster than they could have ever dreamed of scaling it if they would have kept it centralized. We could also look at like WikiLeaks, for example. So WikiLeaks, if you, not sorry, not WikiLeaks.
Wikipedia?
Wikipedia. Wikipedia was started centrally. There was a group of people that started it, but then it became decentralized, where anybody can now contribute to Wikipedia, and it's scaled so fast it's blown past all the old school encyclopedias and whatnot. And so my point to that is that we're seeing these new blockchains start as centralized because they have to. I mean, who else is going to do it? It's a group of people that get some money, they get together, and they decide to launch it. That's centralized. But as it grows and matures, it will then move to a decentralized model, which is what NEO is saying they're going to do, and most of the other ones as well.
Interesting. So going back to NEO, do you want to maybe kind of recap what happened over the weekend in terms of, they had some, they had some issues and stuff like that?
Well, I don't really want to a whole lot because I love NEO and I don't want to spread a bunch of FUD. but NEO, NEO had a little problem over the weekend. We had with their consensus mechanism or their algorithm, one of their main nodes didn't confirm transactions. It was offline or something like that. And because it was offline, all the other computers, all the other nodes then couldn't verify the transaction because one was down. And it basically shut things down temporarily. They've got it fixed. But like I said, we haven't really seen these things stress tested. I used to build a bunch of houses, and when you build a house, you would run the plumbing and the gas lines, and then you'd have to have that inspected. And what they would do is they'd want to fill the plumbing up with water, and then they'd go inspect the plumbing to make sure there was no leaks, right? It's a leak test. And so that's kind of the same here. Like when they built it all, that's great, but you got to kind of put it under some tests, some pressure, and you'll start to see problems like this. So, they had it. They found they started using it. They found a little problem. They've got it fixed. Now, Obviously, it depends on which side of the conversation you're on. We have some of the Bitcoin Cash team that loves to attack other blockchains with FUD. They're coming out with a massive kind of smear campaign, maybe talking about how bad it is and how their whole consensus algorithm is no good and this proves it, blah, blah, blah. But, they have ulterior motives. I think, in the beginning of the internet, these different protocols, they had to go back and rewrite the code as well. So it's not game over for Neo. They found a problem, they fixed it, and they're moving on.
Yeah, I'm not in any ways trying to bring that up. I think it's interesting, though, to, dive into this concept of decentralization and what is the best way, to decentralize, right? So, and it's intriguing that you say Bitcoin Cash is the one poo-pooing Neo, right, of all people, because Bitcoin Cash, one could argue is a wolf in sheep's clothing, right? Because Bitcoin Cash says, oh, we're decentralized and we have this great, decentralized algorithm and anyone can join. But while it is true that anyone could possibly join, practically speaking, I'm not quite sure, and I'd love to get your opinion on this, if there's actually a practical way for Bitcoin Cash to become decentralized due to the fact that, Bitmain has such a massive hashing capacity that's already allocated, towards Bitcoin Cash.
Yeah, I don't think Bitcoin Cash ever will be. I mean, I'm not a fan of it. I don't like anything that it really stands for. And let me clarify something. So, not all blockchain companies, not all cryptocurrencies are alike. As a matter of fact, most of them couldn't be more different. And we'll go back to using the internet as an example. So most of you guys have probably seen a website called Zillow. So Zillow is where you can go look at homes, rentals, and you can see how much homes are worth. And that is an internet company. Zillow is a real estate company that is built on internet technology. Well, we also have Facebook. Facebook is a social media platform, and it's built on internet technology. So they're both built on internet technology, but Zillow and Facebook are absolutely nothing the same other than they have internet technology. So my point is that blockchain is a new technology, and we have blockchain companies, and they're just as diverse as the internet companies are. So when it comes to Bitcoin, Bitcoin is meant to be a replacement for money. And the reason why it was created to be decentralized was to go against the centralized banking model that we have today. The centralized banking model allows for corruption, manipulation, etc. They wanted to create a decentralized money supply. And I'm 100% for that. I believe in the ideology of that. I wanted to get behind that. But there's other blockchain companies that don't need to be that. They're not money. And Neo is not money, right? So they don't all need to be that. Now, but the problem with Bitcoin Cash, to bring it back to your question, Charles, Bitcoin Cash is meant to be a replacement for Bitcoin, which is meant to be money. And I want my money supply, my Bitcoin, to be decentralized, and Bitcoin Cash is not. It was never created to be decentralized from the beginning, and it most likely never will be. And the whole thing about Bitcoin, the whole reason why Bitcoin is revolutionary, it's revolutionary. It's not just an upgrade. It's revolutionary. It's a brand new thing. It's because it's censorship resistant. That's the key word, censorship resistant. That means if I have money, if I have Bitcoin, nobody can take it from me. Nobody can freeze my account. Nobody can steal it, whatever. But Bitcoin Cash is not that. So Bitcoin Cash is not revolutionary. It's PayPal. It's PayPal 2.0. What do we even need it for? So although I don't believe everybody has to be decentralized like Bitcoin. If you want to be money, if you want to compete with Bitcoin in that space, I think you should be.
Yeah, let me pull this up.
I appreciate what they're doing.
Yeah, no, definitely. Let me pull this up. And I don't know if this is a latest one, but this becomes the interesting thing. And, I'd love to get your opinion on this, Mark. So I'm going to share my screen. And for everyone who can see, can you see the chart okay?
I do.
Okay. So this is, and I don't know, this is a representation. I just literally just Googled the image because I couldn't find what I was reading the other, this was like a week or two ago. But this is actually a pie chart that represents hashing power and control of hashing power. And I believe this is specifically for Bitcoin. And if I were to pull up the Ethereum one on this side, let me just Google Ethereum hashing power and look at images on that front, hashing pie chart or something like that. Is this the Ethereum or? Oh no, yeah, this is your Ethereum mining one. So if you actually look at it, and it looks like, yeah, that's the Ethereum mining pool. And again, these are just, I'm Google searching, so I haven't checked the accuracy, but they are representative of what's on the market. So what Bitcoin has is this hypothetical this hypothetical concept that it's completely democratic. As long as I have enough hashing power, I join the network and I quote unquote get my vote or everything on that side. Now the problem in terms of what comes up is you look at the pools, there are, if you look at, let's look at 51% in the middle, you have 4 pools that if they combine, and it's these 3 guys and any one of these people, they control 51% of the network. And there's this whole concept of this 51%, if I control 51%, I quote unquote can change the blockchain, do whatever I need to on that front. And the reality here is these pools have a concentration in terms of they're all located in areas with really, really cheap electricity, meaning, sub 2 to 3 cent kilowatt hour rates. So between cheap electricity and the second thing is a lot of them are located or have relationships with, the people who can manufacture ASICs, which provide, the most efficient in terms of processing power for hashing. And you've got Bitcoin, and then you look at Ethereum. And with Ethereum, and again, I don't know if this is the latest one, but essentially Ethereum's even a bigger issue because literally 2 people have control of 51%, if 2 of them come together. So what's intriguing to me at least is conceptually speaking, so you've got the purists and, Bitcoin Cash is, I wonder if I could look up a Bitcoin Cash hashing power. Bitcoin Cash hashing, hash rate distribution. There's got to be a thing or whatever on that front. Yeah. Haha. Or maybe something's changed or whatever. But basically, if you look at Bitcoin Cash, it looks like one guy owns it all on that front. I don't know if this is the latest one or, how up to date these are, because I'm just kind of Googling at this point. But if you look at it, all these decentralized platforms or theoretically decentralized platforms, because of things that are off-chain, advantages like cheap power, cheap electricity, access to capital, access to cheap labor, they're conceptually decentralized, but in reality, they aren't because of other advantages that people have. So now you have NEO, which they're saying we're not decentralized at all. I mean, NEO is an oligarchy is probably the best way of saying it, where, you've got a voting system, you've got a trust system where, you need to have a pool to kind of play the game. And then if you get voted into the council, you now are in the council. And I don't know exactly how many people they're talking about. I think right now it's basically just City of Zion and NEO, but they're talking about adding other members to the council. Eventually they want to get to a point where maybe there's 30 people, maybe there's 100 people, whatever that number is. There's a small select group of trusted oligarchs that, might make it more decentralized than the other thing. So this becomes, and there's no right or wrong answer. But this, I think, becomes a discussion point, right? Right now with, we like the concept of true decentralization, but the practical reality is it's not decentralized because Ethereum's controlled by potentially 2 people, and Bitcoin, if 4 actors together can do it, is NEO, which is being advertised as an oligarchy, a better solution, or not, better might be too strong a word, but is it worth exploring this alternate solution where it's like, hey, we've had the market out there, we've had decentralization, even with the decentralized world, it's 4 people or 8 people or 10 people that control it. Maybe we just say we have 50 people in, and that's how it is, and it's a different way of governing on that. And I don't have an answer, and I guess I'm just kind of throwing out ideas. And Mark, you've got a little smirk on your face. So I don't know if that means.
I want to know why anybody cares, Charles. Why does anybody care? Why does anybody care about Ethereum's or Neo's consensus algorithm or oligarchy or whatever?
And that's a valid question too. I mean, I would say if I'm going to put my money or my store of value into Bitcoin, I would like to ensure that it's decentralized and censorship resistant, right? And
so that's comparing Bitcoin to Bitcoin Cash.
Yeah.
But you don't compare Bitcoin to Neo, right?
Valid point. Well, I would think if I was to build a decentralized application on a platform, I wouldn't want to build a decentralized application on a centralized platform or not. I don't know. I'm asking these questions, right? And again, there's no right or wrong answer. We're just discussing this for potentially philosophical reasons or whatever, or that's what's been on my mind, these past couple of weeks on that front.
Yeah. I think it depends on what application you're trying to build. So it's not a one size fits all answer. So you said if I was going to build an application, I'd want to know which platform I'd want to build it on. But I think it depends on what application you're trying to build. So, there's benefits to being centralized. There's benefits to being decentralized, and you have to figure out which of those benefits fits your needs. But I really believe, like I said, that projects work the best when they start centralized and then move to a decentralized model. Something decentralized will never take off. It'll never get started.
No, and I agree. So, but let's dive into this further, right? So the value of any decentralized app or even the blockchain in general, why do you need a blockchain versus let's just stick with the relational database? The way I look at it is one of the strongest value propositions of a blockchain is the concept of, what I call censorship resistance. And more specifically, let me define it as like censorship resistance really falls into this concept of data portability. And what I mean by data portability is, today, every piece of content and media that's on there, well, not every piece, but 99.9% of the pieces of content and media that are on there is living in that's in the cloud, is owned by somebody. Either I own it because I pay a fee because I'm leasing a server from AWS or GoDaddy or whatever, or, my data is inside of Facebook, my photos are in the Google silo, my music is in the Apple silo, so forth and so forth. All that content is out there. And what happens is when someone creates the new game, whether it's, I don't know, a new Pokemon Go thing or Magic game or World of Warcraft or whatever, all my characters or all my data, they're living and owned by somebody out there, right? Whether it's Blizzard, whether it's the people behind Pokemon, so forth and so forth. And, using the example, let's use the example of CryptoKitties. CryptoKitties, even though it's not a decentralized application, my cats are living on the blockchain. And what that hypothetically means is if CryptoKitties, if somebody comes up with Crypto Wars, hypothetically, a new decentralized app could utilize my cat, whatever I put into my cat, and now my cat can be doing whatever it needs to do in this other application, so forth and so forth. And while, we're talking about a fun game, or it's debatable whether it's even a useful game or whatever, we're talking about a game. If you think about the concept, today, my photos or this live stream, we're broadcasting on Facebook. So Facebook has this stream and there's a bunch of data that goes into this stream. Now, what if a new social network comes around that wants to use this stuff? You can't because you're in Facebook's walled garden and Facebook has their rules that prevent, access from somewhere else and things like that, right? So if I have the stuff on the blockchain, there could be a Facebook app that uses it. The YouTube world might be able to use this video. Pinterest could use this. Twitter could use, the list could go on. And if another person comes up with a new app, we can still use the same video library. I mean, the same thing goes with followers, right? On YouTube, I have X number of followers. On Facebook, I have Y number of followers. On, Twitter, I have different ones. I have all these silos, and I can't cross things over. So that, to me, is an example of, the blockchain, censorship resistance, and all that sort of stuff. And that's where consensus algorithms come into play, because if I build this on a platform that doesn't have the right consensus algorithm, I could get stuck. And then I've got to quote unquote, port my stuff. Like hypothetically, yeah, I guess I could match all my Facebook fans and try to tie profiles against email addresses and stuff like that, and then kind of rebuild that somewhere else. But it's not really practical. I don't know if this is going anywhere for you, Mark, or if you're just kind of listening and you have you have a smile.
I'm just listening. I mean, you asked if it's going anywhere for me. Yeah, I mean, I'm just listening.
Okay, so I'm ranting. I don't know.
What do you think, Kevin? What do you got, Kevin?
What do I think?
I mean,
I think I appreciate.
You think anyone? You think? What do you think that the average person should be concerned with about this?
Truthfully, where we're at right now, and with that's going on in the background, I'm not concerned. It's like me when I haul vets around. So right now, in a few more weeks, we're going to release the ZR1. The first few that we took up to Michigan to take on the track, they blew up 6 transmissions. Okay, they came back to the plant and they had to go back in and see what was the problem to fix it. They fixed it, quote unquote. So we're about to start delivering here in a few weeks. Now, once we start delivering it, I'm sure, just like any other industry or new technology or however you want to put it comes out, there are going to be bugs in there. We are in the beginning of this phenomena, and there are going to be bugs in there. So things are going to happen, and they're going to have to change, and they're going to have to fix them as we go on. Now, in about 5-6 years from now, most of the bugs will be gone, and it'll be an excellent, product that comes out from Jump Street. But as far as Neo and Bitcoin Cash and Bitcoin Cash token noise, personally, I appreciate it. I hope a whole lot of folks with weak hands get scared and start selling off so I could buy in. That's what's going to happen. So for everybody else that's out there that has it, I'm sorry I'm saying that because, your portfolio can go down, but I'm going to buy in when it get down there. So that's what that is.
We need to rename Kevin as just a shark. Kevin's just here to make money. So this is funny, right? Mark is looking at we all have interesting perspectives. I'm now in the process of figuring out an app to build, and I'm thinking, I don't want to say I've become a purist, but I'm looking at this whole concept of, hey, I want data portability and I want to own my stuff and blah, 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 blah. Kevin, you're saying, I don't care. I just want to make money. So, Charles, whatever you have a problem with, tell me what you're having a problem with, and maybe, fun will go around then, the price will go down, now come and buy it, and then people will realize that it's really not an issue. It'll go back up, which is really fun.
That's right. Well, look, last year, how many companies went belly flop that came into the space? And there's going to be a whole lot more that do the same thing.
Yeah.
And so, when we get to that point, we'll be in those coins, that are really worth something. We're going to be in there.
Yeah, and that right there, Kevin, is exactly why people should care. So, I've been saying along with a bunch of other insiders in the industry that, we'll probably see 95% of these companies disappear and not make it. We already saw, as you just said, right, somewhere between 40 to 60% of the companies launched last year have already failed. So part of the reason why people should care about this is because part of this is about trying to identify the 5 or 10% of the companies that will make this through. And the ones that have the better technology typically will be the ones that have a better chance of surviving through that long, cold winter. So that's one good reason I think why people should be concerned.
Well, so this is an interesting one. So, and it's funny that you bring that up. So as I've been looking at this, I've been compiling I don't want to say a top 10 list because I only have 8, but you look at it right now, there's so much hype about blockchain, right? You've got companies just rechanging, its SEO to the extreme. They're adding blockchain to their name. Long Island blockchain. There was the Riot company. I think Hooters has a blockchain. Like there's a new one every week. There was like a pizza company now that's like a pizza blockchain company on that side. And I think it's a really good question to ask, and to bring up. Do you really need a blockchain or not? What does a blockchain actually do? And I'm going to share with you guys, do you really need a blockchain, right? Is it a shiny new object that some marketer is packaging to say, hey, this is a cool blockchain, and because there's good hype and there's marketing, it goes up? Or does the project, really need a blockchain? And I think, let me just run through this. And I don't know if you'll comment or not, or if you'll just kind of shake your head, Mark, and think I'm rambling on that. But I've got 8 points right now, basically, because the fundamental thing is, do you need a blockchain? The first question is, do you actually need a database? And if you look at a blockchain is just is an extension of a relational database, but a distributed relational database. So let's step back and look at this, right? The first step I look at, when I evaluate a project, or as I'm evaluating the problem I'm trying to solve, is does the problem, can we solve the problem with today's relational databases, whether it's, Oracle or MySQL or even the Microsoft platform. These are relational databases that were developed, 10 or 15, 20 years ago. You've had billions of dollars put into them in terms of hundreds of thousands of developers and everything. Like these are platforms, right? So if we're going to build a project, or if a project is going to exist, we got to make sure first that a relational database can't solve that problem first versus the second one, right? So number one is, first, a blockchain project has to actually need a database. It's funny, there are some blockchain token projects that actually don't even need databases. They're just tokens that exist as a form of crowdfunding, to fund the project on that side. So first, number one is, do you need a database?
Right.
And it's funny, I'm sure you could even name a few. I don't want to go out and expose anyone, but we've run into projects that you say, hey, okay, you have an ICO, but do you even need a database to run your thing? And the best example is a guy we met. And I give this guy credit. This was a guy who was starting a telecommunications company and raising capital through an ICO. And it was basically just crowdfunding on good terms. I mean, if you're starting an internet service provider and he was going to go dig holes to put towers in and plow fiber and everything like that, you don't need a database for that. You need capital, and you need steel, and you need, backhoes to go bury fiber into some Caribbean island, which is what his business plan was. So that's number one, in terms of a red flag. Do you need a database? And what's scary is, I find, I don't know what your opinion is, but I find probably there's a good chunk of projects that, they just have appended blockchain and they don't even need a database to solve the problem they're trying to solve. I don't know. I mean,
Yeah, of course. I mean, there's all kinds of projects where, one, the problem they're trying to solve doesn't need to be solved. And two, even if it did need to be solved, then they don't need the blockchain to solve it. So,
or it's not even, they don't need the blockchain. They don't even need a database to solve it. Because you've got, I think, a first question of, the question I think is, does a database make sense? Then the second question I ask is, if a database makes sense, is there a need for multiple writers on the database? Because the reality is the blockchain is a database, but it is a distributed database. So as compared to a relational database that's centralized, there are significant performance hits of, writing on a distributed database versus writing on a centralized database. Do you agree, disagree? Fair statement?
Yeah, for sure. For sure. So, I mean, it's just different levels, right? Like I said, so do they, I just say, do they need the blockchain? Because I think the blockchain is a little bit more consuming there. But either way, yeah. Do they need the blockchain? Do they need a distributed database? Whatever you want to call it.
Yeah, and again, you're saying you need a blockchain. I've broken it down into 8 subpoints of, if these subpoints are met, then they need a blockchain, right? So, maybe I'm a systems guy or whatever, but I've had my tech hat on, reading specs. So my next point is, I said, number one, do they need a database? Number two, do you need multiple writers on the database, right? So if you satisfy the criteria of A, you need a database, two, you need multiple writers. And the next thing is there the ability, or is there an absence of trust or verification needed, or does that exist, right? So, that's the next one that I have. So absence of trust. And what's meant by trust? Well, that's something where it's like, people have to be able to, I don't know, one user on this multi-access database platform is not just going to let someone else modify entries, without some sort of verification or validation process. So now, after absence of trust, the next thing is there a disintermediation solution to solve the previous problem of, absence of trust? And what that means is, traditionally, to solve absence of trust problems, you solve that with the concept of the trusted intermediary, basically ledger accounts of a bank, right? The bank controls the database, ensures everything is valued, right? So what the blockchain does is, if there is the absence of trust, by putting in a disintermediation, in place, that solves that problem. And the next one I have is, transaction interaction, meaning that the database builds upon itself because you have multiple parties that want to write to it, and they want to build upon the blocks of what they've written on in the first term. So yeah, these are my first 5 criteria that I've been working on. I'm still kind of hashing this out. So this is literally stream of consciousness, on my front, Yeah.
I agree. I mean, everything you said, right? I mean, and that's the basis. That's the very beginning of fundamental analysis that we do, right? So it's easy just to look at go pull up CoinMarketCap and look at the 1500 there, or look at any ICO that's coming up, and read their white paper and say, okay, what are they trying to solve? Does it need to be solved? And do they need the blockchain? Are they using the blockchain in a unique way to do this? And that's just the very basis. If you can't even get through those couple questions, no reason to dig in any further than that.
Yeah, definitely. Cool. Well, we've been on for quite a bit now, and hopefully people are still on. I'm curious to see how many people are actually watching at this. Oh, wow. We actually still have a decent number of people watching. So maybe I haven't driven everyone away yet, with my rambling. Let's see, as we wrap up, any predictions for the week? The crystal ball coming out, Mark, or anything on that end? Where do we have to be? I think Kevin's still hanging on. If Bitcoin is above 11.5 for 4 hours, then that means the tables have turned.
Well, that was last week, and that was at 10.4. Today we're looking at 11.6 is really where I see a big sentiment shift going. So I think we're going to hold it. Maybe not today, but hopefully by tomorrow. I don't know.
So Kevin, the new number is 11.6. What do you think of that?
Personally, I think we're there. Yeah, I think we're there. Everybody knows that the big money is coming, and nobody wants to lose out. All the soft hands then dropped out, and like some people with I can't say soft hands, but with agile hands, they went ahead and sold, thinking that it was going to drop back down to 8 or 9, and now they're crying. And either they're going to jump back in now, or they're going to have to jump in something else. I look at this whole thing almost like the ocean. Like you were saying before earlier when we first jumped on. Bitcoin is a wave. All the other alts are your shells and your little fish that are right off of the shore. When them big waves come on, so do the little shells and your jellyfish and all your little silverfish and everything else come on board with it. So as long as these waves keep on coming, hey, it's time to surf.
Nice.
And I'm a surfer.
So just to clarify, Mark, I'm looking at my Bitcoin chart now that you bring this up. So it looks like there was a big jump about 20 hours ago where Bitcoin had been sitting at 11.1, and then it jumped up around, what was it, 3 o'clock or 2 o'clock Central yesterday, up to about this 11.3 level or 11.4 level, and it peaked around, late last night at around 11.6. And, it's obviously popping up and down, but it's kind of holding steady. So what you're saying is for sentiment to shift, we want it to be 24 hours at 11.6,
I mean, obviously there's no hard and fast rule for sentiment. I mean, that's just what people feel like. That's just my, I guess, my gut. I think if we can hold that level, because then we'll be sustained over the resistance line. So I think we'll see a big shift at that point. But I think, as Kevin said, I mean, sentiment's already shifted. I mean, we've already come off the 6,000, 7,000, 8,000, 9,000. We've sustained over 10,000. I mean, so the funny thing is, I'm playing along. I'm putting my predictions out there, but it's not really something I believe in. I believe Bitcoin's going to be 25,000. That's my prediction. When we get there, I can't really say this year we'll get there. So anything that we can buy under that, I think is a good price. But, to put my prediction out there, I think if we sustain that, I think we'll see a big shift. And that's where we'll really see the momentum start to pick up. The one thing I do want to point out is that, the technical analysts out there, they're arguing that we don't have the volume. The volume's not there. But, any trader that's been in the investment world for more than a decade, it probably knows that, like, off the 2008, 2009 crash, which was like the huge stock market crash, that market grew off of no volume. So you don't need volume to have that market turnaround. So I think it's coming. I think it's already coming. But yeah, 11.6, I think we'll see this big sentiment shift. And then things will really start moving faster, which puts me in line with where I said, like, probably middle to end of March.
Nice. Kevin, do you have any thoughts or strategies? How's your week looking? You around, or do you have deliveries this week anyways?
No, actually, I'm at the house. I'm not going to leave back out till next Monday on the 12th.
Oh, nice. So you got all week to look at charts.
Yes, I've been doing it for a while now. And I'd like to add on to that, Mark. I've been noticing since I've started, every night between, I'll say, 10 p.m. to 6 p.m., somewhere in there, there's always a dip, and that was the best time to always purchase, because I used to stay up, wake up, 11 o'clock, midnight, watch it for a few hours, then go back to bed or something just to see if I'm able to catch it. This past week, and on the weekends, it's like nobody's trading, and so the price always dips on the weekends. Last night, Bitcoin did not drop. I mean, it literally almost stayed the same, just a little bit, $100, $50, $60. There was no major drop at all last night. Yeah. So that's a sign for me.
Went from 11.5 to 11.4. Yeah. Yeah, so that's what's been happening really is, the overseas markets, the overnight markets have been selling off, and we've been buying back in. Good on you waking up in the middle of the night. I'm too tired for that.
It seems like, you really like the technical analysis. And Mark, I know you talk about it, but you're not a big believer on that. But for anyone who's tuning in, and Mark, this is open for both you and Kevin. We are now, based on our audience demand, we are going to start diving further into technical analysis. And we have a fellow by the name of Youssef that will be joining me Wednesday at 2 Eastern. And some of them might know him in our forum. He goes by a name A King Rising. But he's actually a really good trader. Lawrence and I had a chance to chat with him over the weekend, and this guy's been trading, everything from like soybeans to corn futures and everything like that. So, Kevin, I don't know if you're going to be around on Wednesday, and Mark, if you're free, we're going to start diving into technical analysis and learning about this stuff. And, in this case, I'm going to be more of a fly on the wall because I know enough to be dangerous, but I'm by no means a trader when it comes to that sort of stuff. So I know you love talking about that stuff, Mark. So just wanted to put that out there.
I can talk TA with anybody. It's just I just don't believe for this market. it's the way to play it, and it has its place. It has its time and it has its place. But I believe the fundamentals are so far outweighing the technicals that, it's just not the right way to play it. But yeah, it's cool.
Yeah, it'll be a fun time. So everyone out there, thanks for tuning in. It looks like we still have over 40 people tuned in. So that's exciting. I guess someone likes my rambling. So yeah, we've got an exciting week planned for the week. We'll be getting the schedules emailed and posted out for everyone so they can see the content calendar. We've got a packed week in terms of interview sessions. We had some interviews from last week that seemed to be very popular. So we're going to continue that. For anyone who is around or in the mountain region, we'll be going to SALT. SALT has their Day of Crypto conference coming up on Saturday, and I'm going to go because I'm trying to get myself approved on a SALT loan so that, I can take advantage of the ARB opportunity that Caleb said was actually legitimate. So yeah, if you're in the Denver area, go check out SALT's Day of Crypto. A bunch of us will be there from the group in the forum. Should be a good time, and we've got a great week planned. So guys, thanks a lot for tuning in. Great catching up with everyone, and we'll see you guys soon.
All right.
Got it.